This is the Demystifying Crypto and Building Wealth podcast.
I knew that would be worth trillions.
That had never existed in human history. There's been massive opportunities.
The #1 podcast to help you understand and get insights into the crypto world, blockchain technology, wealth building, and financial investing. Now, here's your host, Tico Tawari, the world's #1 most trusted cryptocurrency analyst and Wall Street veteran with decades of experience in the financial space.
So let's get into it. So I'm going to talk about the kind of the macro picture, because that's what's driving prices right now. So I want to give you some perspective on the macro view, how that's going to affect the equity markets, and how I believe that's going to play out in the Bitcoin market. So be patient with me. I will get to Bitcoin and crypto, but it's important that we talk about some of these other factors that are playing out in the market right now. So does that make sense? Yes? Thumbs up? Okay. All right, so let's get to it. Right now, the market is awash in fear. If we take a look at the VIX, the volatility indicator, right now it's moved up quite dramatically. It's moved from a low of 12.5 at the end of March up to a high of 21.5. It's around 16 right now, and it looks like it's going to go higher. So what does that mean? It means that we are probably going to see more volatility, more weakness in the equity market. I'm looking at the S&P 500 right now. I track SPY is the ETF that I look at, and that is running up right against resistance at the 20 and the 50-day moving average. It's probably going to fail there and roll over. Do I know that for a fact? No, but that's what it looks like. So the big fear right now is, Wall Street came into 2024 with these outlandish expectations that we were going to see multiple rapid rate cuts. And in Wall Street's defense, Jay Powell signaled 3 rate cuts this year. But here we are in April. We have hotter readings of inflation. We have an American economy that GDP is running at 2.4%. We have just about full employment. Nobody with a straight face can say that the economy needs a rate cut. I mean, yes, a lot of people will benefit from a rate cut. Mortgage rates will go down. Commercial real estate prices will improve. And the housing market, you'll start seeing some more activity there when mortgage rates come down. But in terms of the overall broad market, you cannot make a case that this economy desperately needs to have lower interest rates, because it doesn't. And Jay Powell knows that. I think he's going to continue to push on this narrative, higher for longer. I would be shocked if he does a rate cut in June. I mean, I would be shocked, beyond shocked. To me, I would actually be nervous that he's seeing something in the economy that none of us are seeing, that he feels that he needs to ease liquidity. Yes, the government does need lower rates because the bill on their debt is so high. So I think that Jay Powell is going to push out rate cuts as long as he can. I think he has to cut rates at least once, maybe twice this year if he wants to keep his job. Otherwise, he'll probably get pushed out, whoever becomes the next president. But I don't think he wants to. And so the market might throw a tantrum and have a sell-off. Now, here's the thing. When you have equity sell-offs, NASDAQ sells off, S&P sells off, it doesn't matter what asset you own, whether it's correlated to the S&P or NASDAQ or not. They pretty much hit the sell button, and the traders move to cash and they say, okay, we'll wait. That's just the nature of how markets work. So again, if we see ongoing weakness in the S&P 500 and the NASDAQ, it'll bleed over into gold. It'll bleed over into Bitcoin. But it is not something you should worry about, and here's why. We are in a bull market. So let's talk about the equity bull market, and let's talk about the crypto bull market. The equity bull market has been going for a long time, but we are still in a bull market, which means that sell-offs should be bought, not panic sold into, even scary sell-offs, because we are still in a bull market. So if you see the S&P 500 roll over, if you see the NASDAQ roll over, if you see us getting close to the 200-week moving average, you should buy it. If you are an equity trader, if you are an equity investor, we are still in that phase of the equity market cycle where you buy the dips. we're still in the buy the dip phase. Now, that won't always be true. We will segue at some point where you're going to want to sell the rallies and not buy the dips when we transition from a secular bull market to a secular bear market. But we are not there yet. Not yet. Might be a year, might be a year and a half, might be 2 years, but we are not there yet. Equities, even if they drop precipitously from here, which they might, do not confuse that with the end of the bull market trend. Just like in 2023, when we got our clocks cleaned in Q1, was brutal, and then in November, again, brutal sell-offs. Each one of those was a buying opportunity in the equity market. And again, if this sell-off worsens in the S&P 500 and in the NASDAQ, in my opinion, those are buying opportunities. So let's talk about Bitcoin. Now, unlike the equity market, which has been in a bull market for a long time, Bitcoin has just entered into the first real stage. I would say at the second stage of its bull market, meaning that it hit its first all-time new high and is now pulling back. Historically, Bitcoin has pulled back after the halving. You get a run up into the halving, which is generally a sell the news event, and then, traders leave it, people get bored, and Bitcoin drops anywhere from 15, 20, sometimes 30%, sometimes even more than that. So if that happens here, you need to know that it is a gift. I wrote an article on my site, tikatoari.com. Just go to the blog section. It's called Bombs Are Dropping in the Middle East. Here's what to do about it. And in that article, I lay out exactly how you can take advantage of the pullback, and if the pullback worsens, exactly how to allocate capital to Bitcoin to take advantage of that pullback. The thing to remember, it's easy to get caught up in, oh my goodness, what's Jay Powell going to do? Oh my goodness, what's going to happen with Israel? Oh my goodness, what's going to happen with Iran? Oh my goodness, what are the inflation numbers going to be? Oh my goodness, what are the employment numbers going to be? Oh my goodness, what's the PPI going to be? It's so easy to get caught up in all of that minutia that you and I can't answer, right? Even policymakers don't have those answers. So what we have to focus on is the real information that matters, right? The real information that moves the lever on your net worth. And so the information that matters is that we are in a bull market. And in a bull market, if you are a trader, you buy the dips and you sell the rips. If you are an investor, you use the pullbacks to either add to your core position, or you simply have your trading account that you use to trade around your core position. Now, I have my core Bitcoin position on. I have Bitcoin that I bought from all over the years since 2016. When the S1 was filed on behalf of BlackRock for the ETF, I committed enormous amounts of money into Bitcoin. I ended up buying Bitcoin at 30K and watched it immediately drop to 25, but I didn't care because I knew that once that Bitcoin ETF got approved, it would bring in a whole new slew of capital into the space, sparking what I believed and still believe will be the biggest bull run in crypto that we have ever seen. So we are still very early in this bull market. Now, because we're in the crypto space all day long, to us, a day is like a week, and a week is like a month, and a month is like a year. But for the rest of the world out there that don't know what a Bitcoin halving is, are completely unaware of how their capital is being debased, don't really understand how Bitcoin can save their buying power, right? All those people over the next 18 months are going to get an education. Not by us, not by me, not by you, but by Wall Street. Why? Because Wall Street is finally incentivized to onboard people into crypto-based products. And if there's one thing that you can put your money on in order to make money, and that is betting on Wall Street's self-interest, betting on Wall Street's greed. Friends, we are putting our chips on the same side of the table as Wall Street. And when you can do that early enough in the game, you can't help but trip over the stacks of dollar bills that are going to accumulate in your investment account. So remember, we're early. This is the early stage of a bull market. And when you're in an early stage of a bull market, risk is actually lowest. When you get that first big sell-off after the first all-time high, it's as close to a gimme as you can possibly get in financial markets. Look, nothing's guaranteed, right? I mean, if World War III breaks out tomorrow and a pandemic happens and someone gets assassinated, all bets are off. But outside of something absolutely crazy, series of crazy events like that, the first major sell-off after the first all-time high is the easiest money you will ever make in financial markets, and especially as it relates to Bitcoin. So for me personally, I would love to see a $52,000 print on Bitcoin, a $48,000 print on Bitcoin, a $42,000 print on Bitcoin. Will we get it? I don't know. I don't think so. But I'm prepared if we do get it, which is why I strongly urge you to read my article on tikatuari.com, the one that's called Bombs Are Dropping, What to Do About It. And in that article, again, I lay out exactly how to take advantage of a sell-off if we see this sell-off pick up steam, which it might. But here's the thing. Once you have the knowledge, once you know, okay, we're in the early stages of a bull market, the sell-off is a gift. It's not something to run away from. That took me a long time to learn. I remember when I first recommended Bitcoin, I think it was like 438, 435, something like that. So I recommended Bitcoin, and I think a week later, one of the core developers, the early developers of Bitcoin, rage quit Bitcoin, said Bitcoin was going to be a failure, sold all his coins, and Bitcoin dropped down to 375. And I remember thinking, oh my goodness, have I made this huge mistake? Here's this person, this insider who knows everything, who's saying that Bitcoin is worthless and Bitcoin has no value. So instead of just relying on that person, again, I revisited my own research. I revisited the underpinnings of why I thought Bitcoin had value. And instead of selling, I bought more. I went out and I did videos like this for my early readers and told them, look, we've got to take advantage of this. So I'm going to say the same thing here. If we do see a sell-off in Bitcoin that goes a bit bigger, and again, I don't know. Bitcoin tomorrow could go to 120K. I don't know. How's that for truth in advertising? On a daily basis, I don't know. But what I do know is if Bitcoin does take a tumble, I know exactly what to do. I know exactly where to put my buys in. I know exactly how much capital I want to put at risk. I know exactly where I'm going to allocate my capital at every single level. And that gives me confidence. It also gives me confidence in my core position because of how early we are in this bull market cycle. We just hit the first all-time high. And so you have to hold on to that. That is the piece of information that matters. That is the piece of information that matters the most. Now, when it comes to altcoins, you got to remember, Bitcoin is the alpha and the omega of the entire crypto market. If Bitcoin's down, altcoins are going down. Really what I am looking for, I would love to see BTC get hit very hard here because I know that the alts will get smashed and that will lead to a buying opportunity of a lifetime in the alts. It's part of the reason why I am not launching my service until June. What I think will happen, the way I think this will play out, is that people will get upset if Jay Powell doesn't cut in June. There'll be some kind of a sell-off. I don't know how long it will last. It might last a day, it might last a week, it might last a month. But I want to help position my new subscribers into the best projects at the best price possible. And if that means that I launch in the middle of an ugly bloodbath market, so be it. I'll probably sell less subscriptions, but I don't care. What I care about is getting the best print possible for my subscribers. Let's have a look. Okay, just real quick here. Roy Moore says, Tika, Palm Beach canceled all the newsletters. I called them and they told me that you were the owner of all the Palm Beach newsletters. No, I am not the owner of all the Palm Beach newsletters. That's just not true. Okay. So that's the macro piece. That's the next piece that I wanted to do was prepare you. If we do get some weakness, read my article. It will describe how to take advantage of this weakness. Now I want to pull back the camera and give you the bigger reason as to why Bitcoin is going to go higher and why you must have a decent sized allocation to your portfolio. At least 5%, probably 10%. If you're younger, perhaps more, maybe 20% or more. So let me explain why. And I'm going to glance down here at some notes that I have. Okay, so what I want to do now is just give you really give you hard numbers on the reasons why you have to have Bitcoin in your portfolio. In my opinion, this decade will go down when financial historians look back at it. It will go down as the decade of debasement. This is the decade of debasement. Our buying power of our American dollars will be debased. Now, what's interesting is that more of the world is actually using dollars in trade, and people get confused and they think, oh, well, look, more of the world uses the dollar in global trade than they did 10 years ago. That's true. It's true, and it's because everybody else's currency is falling apart so quickly. But rather than looking at how used the dollar is, and it is used a lot, we have to look at the dollar's buying power and how the dollar has maintained its buying power over time. You see, the reason why we invest is, yes, we want to have a better financial future. Perhaps we want to retire. We want to grow our wealth. We want to have a nicer home. We want to have a better life for our children, a better life for ourselves. There are material things that we aspire to. This is a normal part of being human, right? We want better, nicer things. We want a better, more comfortable life. We want access to better health care. We want to live in safer neighborhoods. We want better education for our children, right? So this is the reason why we invest. Our biggest enemy in investing, other than our own psychology, is our governments, because governments consistently debase the value of paper money. So our investments must outpace the debasement of the paper currency. Does that make sense to everybody? Is that clear? Okay. What you need to do is you need to look at how debasement has happened over the last 10 years and ask yourself, is that debasement going to get worse or is it going to get better? So let's look at 2014. So since 2014, the price of a Big Mac has doubled. The price of a car is up 50%. The price of a house is up 103%. The average grocery bill is up 42%. And the average rent is up 148%. If your wealth has not at least doubled since 2014, if your income hasn't at least doubled since 2014, you are falling behind. You are actually getting poorer. This is where Bitcoin comes in. Bitcoin cannot be diluted. Bitcoin cannot be commandeered. Bitcoin cannot be printed at will. So Bitcoin acts as this safety protocol for the rest of your investments. I'm not suggesting that all of your investments should be in Bitcoin. It doesn't make any sense to do that. Most people can't deal with that level of volatility. I do think you should own some real estate. You absolutely should own some stocks. I think you should have some short-term bonds for when you need cash in a hurry. But you must have an allocation to Bitcoin to help protect the rest of your assets, because the rest of your assets cannot keep up with the debasement of the dollar. The American government is now spending $2 trillion more than it has coming in during a period where we are not in a recession, where we have full employment, and when we're not experiencing a war. So think about that, right? What happens if in a year or 2 years from now, we do have a major war? We do go into a recession. We do have massive unemployment. What's the deficit going to be then? 4 trillion, 5 trillion, 6 trillion, what's that going to do to the buying power of your money? It's going to collapse. And so traditionally, before Bitcoin, we would use gold as this type of hedge in order to protect ourselves. And that's the reason why gold prices have doubled over the last several years. But gold cannot keep up with the rate of debasement, which is why I have substituted Bitcoin instead of gold. I think everyone should have a minimum of a 5% weighting in Bitcoin, a minimum of 5% weighting. Probably 10% is probably better, but I understand that's not, a lot of people can't deal with the volatility of 10% of their net worth fluctuating to that degree. I get it. But at least a minimum of 5% of your net worth should be in Bitcoin, because Bitcoin is still very small. It's only $1.2 to $1.4 trillion in size. In my opinion, by the end of the decade, it will at least match the market cap of gold, putting it at $700,000. So, if you've got $1 million net worth and you put, let's make the math simple, 10% in Bitcoin, right? You put $100,000 in Bitcoin and it 10x's by the end of the decade. Well, you've doubled your capital there. You've probably increased your capital. Let's say the rest of the money is in equities. Your equities are up, let's say, a minimum of 50 or 60%. So you've kept ahead of inflation. I believe that inflation this decade will far eclipse the inflation that we saw from the previous decade. And again, it's probably not going to be driven from the normal factors that we saw in the 1970s, but it will be driven by monetary debasement, by essentially government spending and printing too much money, which will then debase the buying power, the value of the money. Yes, gold will also increase during this time, but it won't go up as much as Bitcoin will. So you don't need to have as much allocated to Bitcoin in order to preserve your purchasing power as you would to gold. To fully preserve your purchasing power in gold, you might have to put 30 or 40% of your capital in gold versus a 5% allocation to Bitcoin should have you covered for the rest of this decade in terms of protecting the rest of your assets from the monetary debasement effects that I think are going to play out through the rest of this decade. So that's my overall larger scale thesis. I believe that over time, the rest of the world, and certainly the rest of the country in the United States, is going to wake up to this theme of this debasement decade, and they are going to be looking for a way to protect themselves from that currency debasement. Some will choose gold, many will choose Bitcoin. Okay, so Missy asks, why is the government putting itself in this position? Because politicians are driven by the next election cycle. They're not driven by anything else. Their love and lust for power knows no bounds. Think about these career politicians that have been in politics for 50 years. I mean, they literally die in office. They are so addicted to the power, the prestige, and the financial gain they get from being in power that they don't care about the long-term damage that they're going to do to the country, because they're in the 70s and 80s. They're not going to live long enough to experience those negative effects. That's why. I have a question here about ETH. ETH's going higher. It might have some weakness over the short term with the rest of the market, but we will most likely have an ETH ETF, and ETH will go higher. I think ETH has a very good chance of hitting 10K during this cycle. The two hardware wallets that I recommend are Trezor and Ledger. Question is, how much should we allocate to ETH? So in the past, I was 50% ETH, 50% Bitcoin. I'm now about 80% Bitcoin, 20% ETH. And the reason why is that there is a Bitcoin ETF. So more capital will flow into Bitcoin. And at least over the first stage of this bull market, the gains in Bitcoin will eclipse ETH. I think once the ETH ETF emerges, then I'll allocate more money into ETH ahead of that time because then I believe that ETH will close that performance gap between it and Bitcoin. This is a great question. Do I see any other major corporations investing their capital in BTC? Not right away, no. And a lot of it has to do with politics. So if you're Microsoft, or if you're Apple, or if you're Google, or if you're Amazon, if you're Meta, you deal with the federal government all the time. You cannot afford to get on the wrong side of the federal government. If Apple Computer came out tomorrow and said, oh yeah, we bought $5 billion worth of Bitcoin, I think the federal government would take that as a personal attack and could make life very difficult for Apple. So I don't think we're there yet. Maybe in the next cycle. Hopefully I'll be proven wrong on that. But I think the CEOs of these major big tech companies are very, very sensitive to not angering the federal government, because the federal government can really put a lot of heat on them. Okay. Question is, how do I feel about Bitcoin IRAs? A lot of them charge crazy prices, and now with the ETFs, you don't need them. You can buy a Bitcoin ETF right in your IRA. Do you consider IBIT a way to invest in Bitcoin long term? Well, yeah. So it depends on the person. If you're the kind of person who loses things, who just doesn't want to deal with the inconvenience of self-custody, then IBIT is a phenomenal long-term hold. I'm, in fact, probably going to buy some IBIT and put it in, my son's one of my son's accounts, and just leave it and let it sit there. I personally, for my core stack, have used self-custody, and then for my trading stack, I'll use the ETF. What will ETH be worth in 2030? I don't know. I don't have a number for ETH in 2030. RWA and tokenized assets still a thing? Very much so a thing. Look at what Larry Fink is doing. I mean, he's setting up a real-world asset fund on Ethereum and tokenizing assets. So that is very much a thing. Question is, do you prefer IBIT for a Bitcoin ETF? I personally own IBIT. I think they're all good. The reason why I like IBIT is the fees are very low. It's BlackRock. They're a massive, too big to fail company. So I have confidence in that. But the Fidelity ETF is good as well. Okay, question. What do you think would happen to BTC if the internet power grid is shut down by a terrorist attack? Well, the question, I'll revert the question back to you. What do you think will happen to your bank account? What do you think will happen to your stocks? What do you think will happen to all electronic trading? There'll be a pause, there'll be panic, and everything will be restarted. So the entire Bitcoin blockchain, the record of the blockchain is held on thousands and thousands of computers. So when the power grid came up and the internet came up, the blockchain will find consensus among all the nodes again and keep on producing blocks. Okay, the question is, would a small allocation to gold or silver along with BTC be a good idea in the event of civil unrest or infrastructure outages? I always said, if the end of the world is coming, the thing that's going to have the most value are food, bullets, guns, water. Purification tablets for water. Those are the things that are going to have real value. In the end of the world scenario, do I want a lump of gold rock in exchange for my water? No, but I'll take some bullets. So I'm not an end of the world kind of guy. I look at how much that humanity has gone through and got through. I'm probably the wrong person to ask that question to. So the question is it advisable to use multiple hardware wallets to store your Bitcoin? Yeah, I think that makes sense, especially if you're interacting with the blockchain a lot. You want to have a dedicated wallet. Let's say some people are very involved in NFTs or trading or airdrops. That should never be a wallet that you hold, any asset on that you care about. That should just be a wallet that just interacts with the blockchain. So the question here is, what's a better retirement strategy, Bitcoin self-custody or ETF, 15 years left to retire? Well, I think BTC is a great retirement strategy. Again, I would not put all my capital into it because of the volatility. A lot of people say they can deal with volatility, but if you have all your money in an asset that can drop 85% every few years, there's not a lot of folks that can deal with that. Just whether you self-custody or use the ETF, again, that's really more about what you're comfortable with. Self-custody is a lot of responsibility. If you are a person that can handle that responsibility, then I prefer self-custody. If you can't, then own the ETF. This is a great question. Thoughts on the biggest narratives this cycle, Bitcoin Layer 2's AI or RWA? I think the Runes protocol, I think meme coins on Bitcoin, I think different types of functionality on Bitcoin, L2s, they're all huge narratives. RWA is more, I think, going to be a narrative that drives ETH. AI is going to be an ongoing narrative. But layer 2s on Bitcoin, I think are going to continue to be a big narrative. A lot of questions asking about the Palm Beach Confidential portfolio. And one of the things that I'll be doing, is I will provide updates, the coins that we had in the Palm Beach Confidential portfolio in my new service. What do I think about MetaMask? Yeah, I mean, it's the wallet, it's one of the most widely used wallets out there. So yeah, I have no problem with it. Oh no, the Bitcoin halving already happened. That happened on the 19th. Question, is it safe to invest in crypto in banks like Revolut, etc.? I think when it comes to Bitcoin, you should either custody the coins yourself or buy an ETF like IBIT or Fidelity ETF. I think those are the safest ways to own coins. Question on multi-sig. Is multi-sig better? Yes, multi-sig is better, but it's a steeper learning curve for most people. Okay, my new service will launch sometime in June. Okay, friends, I want to thank you so much for tuning in. It's wonderful to communicate with you this way. I want to thank you so much. Please check out tikatuari.com. I publish there anywhere from 1 to 3 times a week. I put new articles. I'll have a new article coming out either today or tomorrow. So check that out, tikatuari.com. Go to the blog section, and then you can see my most recent ideas. Okay, friends, I want to thank you so much for tuning in. It is always a pleasure talking to you, and I want you to always remember, let the game come to you.
So that concludes today's episode. Thank you for listening. We'd love to hear your thoughts in the comments section. You can find the show notes on www.tikatuari.com. If you found this episode helpful, please share it with others, talk about it on social media, and leave a rating and review. Don't forget to subscribe so that you never miss another episode. Thanks again, and we'll see you next time.